All right, let's dive into something pretty wild. How exactly does a collection of digital cartoon penguins, an NFT project, try to become a massive global brand? Like a brand you'd actually see on the shelves at Walmart. It's a journey from pixels to products. And believe me, it all kicks off with one really powerful idea.
This sentence right here, this is the entire playbook. It's the mission statement, the core thesis driving the whole Pudgy Penguins operation. It sounds simple, but this idea of connecting the digital world with the physical one, well, we're about to break down exactly how they're trying to pull it off.
So let's be super clear. The goal here is audacious. It goes way, way beyond just being a bunch of collectible JPEGs. The real ambition is to build a globally recognized intellectual property. I mean, think less crypto project and more like the next Pokemon. That's the scale we're talking about.
And how do you do that? Well, you build what they're calling a cultural moat. And you can see the proof right here. This isn't just about the money, it's about embedding the brand so deep into mainstream culture through social media, big-time partnerships, and just being everywhere that it becomes, unshakable. They're building a fortress of cultural relevance to protect their long-term vision.
Okay, so you've got all this buzz online, you've got the cultural moat, but how do you turn that into a real, sustainable business? The answer from Pudgy Penguins is something they call the flywheel. It's a genius model designed to be a self-powering loop where every single part fuels the next. Let's take a look at how this thing actually connects.
So here it is, the phygital flywheel. Step 1, it all starts with the digital IP, the original NFT characters. Step 2, they license that IP for real-world stuff like physical toys. Step 3, and this is key, some of the money from those toy sales gets funneled back into the project's crypto token, PENGU. Which brings us to step 4. That value is then returned to the community, which makes the brand stronger, gets people more excited, and starts the whole loop all over again. It's their big bet on a physical to digital economy.
And listen, this is not just a theory on some PowerPoint slide, no way. They are executing this plan at an incredible pace, pushing the Pudgy Penguins IP into basically every corner of the consumer world. I mean, look at this. Toys in Walmart, Pez dispensers, collaborations with Lufthansa, and even NASCAR, not to mention a mobile game with over 500,000 downloads. They are aggressively making these digital penguins a very physical reality.
Now let's talk about the token at the heart of all this. 121.6 million. What's that number? That's how many Pengu tokens were recently just destroyed. Poof, gone. It's a move called burning, and it's done on purpose to shrink the total supply. So what does that mean for you? Well, in simple terms, fewer tokens floating around could make the ones that are left more scarce and potentially more valuable. But building value is only half the story. The other half is protecting it.
Because here's the thing, once that token is out there, it enters a totally different world. It's no longer just about cute toys and cool brand partnerships. Now it has to survive in the wild, and let's be honest, often predatory arena of the crypto trading markets.
This quote right here just nails it. In these markets, you've got these incredibly powerful players, and their job isn't just to help people trade. No, they actively shape and manipulate prices to their own advantage. And usually, that's at the expense of everyday retail traders. They have a secret playbook of traps, and guess what? We're about to open it. So who are these predators in the arena? We're talking about the market makers, the big exchanges themselves, massive holders we call whales, and these super fast algorithmic trading firms. Their goal is actually pretty simple. Exploit predictable human emotions like fear and greed to make as much money as possible. And they do it using a series of well-practiced traps. Here's how they work. First up, we've got the classic fake breakout. They'll push the price just a little bit above a key level, tricking traders into thinking, this is it, it's going to the moon. But as soon as all those hopeful buyers jump in, bam, they reverse the price, wiping out all of those positions. Next up is the stop hunt. It's ruthless. They know exactly where you've placed your stop-loss orders to protect yourself, so they'll intentionally push the price down just far enough to trigger all those stops, creating a wave of selling that they can then buy up cheap before they send the price right back up. Then there's the range trap. You'll see the price just bouncing back and forth. They'll fake a move to one side to liquidate traders, then immediately reverse and do the exact same thing to the other side. They clean everyone out before the real move even starts. The inducement move is a little sneakier. They create this slow, tempting, low-volume crawl toward an important price level. It looks safe, so it lures in the cautious traders. But the second enough people are in the trap, they slam the price hard in the opposite direction. And finally, news manipulation. This one's tough. They'll use genuinely good news, like a huge partnership or an ETF filing, to create a buying frenzy. But while everyone is buying the hype, they are quietly on the other side, selling into that excitement and dumping their bags right at the top.
So this isn't just some abstract theory, right? These traps are real. They play out every single day, and the Pudgy Penguins token is absolutely no exception. In fact, we just saw a perfect real-world example of this play out. $45.6 million. Let that sink in for a second. That's the value of Pengu tokens that a single whale moved to crypto exchanges in just 1 week. A move that big, it doesn't go unnoticed, and it sent a shockwave of fear through the entire market.
Here's the timeline of exactly what happened. Between July 11th and 17th, one wallet sends almost 1.6 billion Pengu to various exchanges. Now get this, they didn't even have to sell it. By July 17th, just the fear that they might sell was enough to cause the price to tank by almost 10%. It's a textbook case of how one massive player can manipulate market sentiment and price without lifting a finger.
So all of this, it puts Pudgy Penguins at this incredibly fascinating crossroads. On one side, you have this really ambitious, very well-executed plan to build a legitimate global brand. But on the other, you have the brutal, volatile reality of the crypto market it has to live in.
And this really lays out the two possible futures perfectly. The bull case is strong, right? An ETF approval could bring in a flood of new money. Their mainstream partnerships could create real, sustainable income, and that flywheel model could become the new blueprint for brands. But the bear case is just as real. There's a looming trademark lawsuit from the original penguin clothing company, the constant threat of whales dumping their tokens, and the fact that its price is still tied to the crazy ups and downs of the meme coin market.
So that leaves us with the ultimate question, doesn't it? Are we watching the birth of a revolutionary new way to build a brand, one that finally bridges that gap between the digital and physical worlds? Or is this just a very expensive, high-stakes lesson in the volatility and manipulation that you just can't escape in crypto? The story is far from over, and honestly, only time is going to tell which one of those narratives wins out. Thanks for tuning in.